Good morning. Today we will discuss about a new topic in financial accounting or accounting for managers, whatever the topic is. And this topic is with respect to international standards in accounting. We have standards in accounting in our local country. Each country had its own accounting standards, but it was not varying largely. But as days passed, there was a need to create an accounting standards in international level. Right? Hence, I thought this topic shall be discussed. Before knowing what IAS and IFRS is, we'll just start with GAAP. In all countries, generally, they followed this GAAP, generally accepted accounting principles. We had accounting concepts and principles, it is nothing but that. But basically there were certain strong principles that has to be followed in accounting to prove that it is a best system. So GAAP was initially existing in all countries. Later what happened was, there emerged one thing called as IAS, International Accounting Standards. It is given here that IAS was a set of standards that was developed by International Accounting Standards Committee called as IASC in 1973. But they later were replaced by IFRS a few years back. So IAS was dominating the world for a long time, though it was not accepted by most countries, not most countries, few countries. But still IAS was proved to be a good method. So they started following IAS throughout the world, and few countries didn't accept it still. We'll also see about a small history about that. In case of IFRS, it is International Financial Reporting Standards. Later what happened was, as capital market emerged in each country and throughout the world, we had international capital market, international commodity market. Then the need for IFRS grew more. So now you are able to know the reason why IFRS emerged. So due to this growth in international capital market and commodity market and markets like that, we required financial reporting standards. This financial reporting standards would give you a better idea to invest in various companies or various commodities. So we'll discuss about these factors one by one. So a short summary of GAAP. I said you already, it is about nothing but about principles of how accounting has to be. It says about the cost principle. So any accounting has to be recorded based on cost. The revenue principle, you should have revenues. The matching principle, every income should have if you have debit, you will have credit. Every transaction will have debit and credit. Matching principle, you have matching principle. Then the disclosure principle is very important since those days itself. You have to disclose all those transactions which has taken place in monetary terms. Maybe you pay dividend after tax. You don't disclose in accounts in financial accounting statement. For example, in trading and profit and loss account, you don't put it as dividend, because after profit after profit you pay tax, and then with the rest of the money you pay dividend. So when you pay dividend, you will have to account it also. So that is disclosure principle. And apart from dividend, there are few more things that the companies have started to look in and the principles have grown. It is about disclosure. You need to disclose a lot of things, right? The more you disclose or more you are honest and genuine, your company, shareholders and everyone is going to be better in life. If you are going to take undue advantage by non-disclosure, then there are lots of people who is going to get affected. That is karma. Right, we'll move into our topic. We'll discuss the main topic, IAS versus IFRS. What is the difference? I have explained to you earlier the basic difference between these two. What exists between these two is very important. It is clear. Generally, it appears to be incredibly similar, right? The meaning that many countries continue to follow as IAS and differ to IFRS only when they do differ in certain aspects. In certain aspects, IAS doesn't have certain provisions, whereas IFRS has. In certain aspects, IAS is different from IFRS. So, in those aspects, there are little difference in opinion. But remember, a wise accounting person, accounting manager knows which one is good, which one is not, for their country, for their company. That is very important in accounting, remember. Right, we'll move to the next. Professionals sometimes refer IAS and IFRS together and they aren't same. Certain professionals use this word as though they are same, but they are slightly different is the fact, right? And we'll just look in how this has happened. Let us say that IFRS refers to old standards issued between 1973 and 2001 by International Accounting Standards Committee. So it gained importance from 1973 and 2001 and even later till date. Even later too, but the contribution was large from 1973 to 2001. Then, as you know, after 2001, we started to have commodity market and stock market through online. NSE in India started to offer its online share trading after 1995 and 2001 they were able to link their dealers across India through satellites. That was the first attempt they did. So after 2001 itself, the need for information and report started to grow. So the company's reporting system has to find a new way. There IFRS started to gain importance, but still, as I said to you, even after 2001 until now, lots of people are following IAS standards too. As you know, what they contribute is important. No one is going to ask whether it is IAS or IFRS, what good it is. If it is the standards, they know that, okay, IAS 31, oh, this you have followed, good. That they know. That's the reason why we say IAS or IFRS. Even if you don't say IAS and IFRS, and if you follow a good accounting methodology, no one can reject you, remember. Like ISO 9000 series, No one is going to say that your company quality is poor if you don't have any ISO. Until your product is of good quality, no customer complains your product, or even if your complaints you have improved and you have grown, then you don't need any ISO. So these accounting standards have emerged because of certain things that require attention at the level of company in terms of accounts and reporting to various organizations like in India, SEBI. This reporting has to be done to SEBI. SEBI has given lots of guidelines to report. So now you are aware that after GAAP, IAS emerged in 1973 till 2001 and later till now. Then IFRS gained its importance. We look into IAS and IFRS, what are the differences, and we'll just look into IAS standards. Maybe the heading says you what is the difference, but here we are going to look only about IAS standards, right? This is IAS 1. IAS has also given lot. I'm going to take a few and show you, a handful and show you what IAS is about, right? IAS 1 is concerned with presentation of financial statements. They are given you certain things to say that these are the ways in which a financial statement has to be given. Here I have highlighted. It requires a full set of financial documents including cash flow statement, profit and loss statement, etc. So this is IAS 1. They are given you structured format. How your cash flow statement has to be, how your profit and loss account statement has to be. And remember, I am reminding you again, IAS 1 can be tracked back to back from 1974 and has been updated over a dozen of times, most recently in July 2020. And this is a proof that still IAS 1 or IAS standards exist till July 2020. They have updated, right? So this is about IAS 1, and similarly we have IAS 16. And IAS 16 is for certain purpose like treatment of accounting function. Here I just highlight treated by your accounting function, and it is should be also depreciated, about depreciated amount, and it is about that useful life on a systematic basis. You have to say the useful life of an asset and etc. etc. And there are typical cases wherein certain companies mention that, for an example, it is your copier machine. They would say that if you take 100 copies per day, the life of the machine is 10 years. If you take 1000 copy per day, the life of the machine is 4 years. So the depreciation is really interesting. So I have said earlier, your accounts manager has to be wise, and your employees must also be wise enough to say your auditor that this machine can be depreciated in a different way. Lots of standards has been given, right? So we'll move to the next slide. IAS 36. Here it's concerned with impairment of assets. Remember, IAS 36 instructs that assets are not carried at a more value than their recoverable amount. IAS 36 says you. So it is good to treat it correctly, right? And he also mentioned that entities must run impairment test to ascertain the loss of value of an asset. How much loss that asset has created. If it is a fixed asset, generally you will not have loss. But still, if it is a machinery or movable asset, generally you will have a loss in value due to usage, etc. Maybe a automobile you have, or a bus you have, or a local movable vehicle you have that is used to move certain raw materials or certain big package. So it is about IAS 36 and IAS 37 about contingent liability and contingent assets. A wonderful concept. They have been covering each and every important aspect. What is contingent? You don't know whether it will happen or not. You will not know whether it will come or not. Contingent contract is an example. Contingent contract. What is a contingent contract? You agree to pay something on happening or non happening of an event. That is a contingent contract. So, due to certain contingent contract or certain business affairs like insurance, etc., certain business affairs, there may be contingent assets and contingent liabilities. So, here they have said that, and they are given an outline how these should be accounted for and disclosed is very important. You must account those contingent liabilities and assets and then disclose it. And they also said that how it is taken into account, the risk and uncertainties, and they have been updated in the year 2020 May. So IAS still exists, this IAS standard still exists. That is how certain countries people are confused. So whether you have IAS standard or whatever standard, in future people are not going to worry about standards. What is the purpose of these things? Whether you are going to follow that purpose, whether you are going to fulfill that purpose, whether you are genuinely caring your people, your shareholders, your stakeholders is important in future. Remember that. These standards are least preferred. But these standards are guideline. You can always follow these standards in case you don't know what it is. For an example, good trait in a man builds a man a better man. You can never defer to it. Similarly, these IAS standards. If a human being doesn't know what is good or bad, educational institutions or schools says you what good and bad. Mark doesn't decide you are good or bad. Remember, your marks doesn't decide you as good or bad. You might have good marks, but you might be a bad man, bad student. Remember that. So, following good principles is important. Good accounting practice is important. Here, IAS 36 also gives you certain things. In handling intangible assets, as said by me, IAS covers important aspects that is required to be accounted and reported for betterment. Right? A wise man doesn't do this or take undue advantage of this and intangible asset. They do that to benefit to such that all the stakeholders are benefited. Right? So here it is stated clearly about intangible assets. Right? I have given you few IAS standards and I will show you more in the later tables. How many countries use IFRS? You can see IFRS report in September 2023 that 160 out of 168 jurisdictions have committed to follow the international financial reporting standards. Remember, committed to follow. We don't know they are following or not. But lots of people are following IAS. Remember. Today, but people are speaking about IFRS. There are good things in IFRS too. Right? But we can never defer that IAS has not done anything good. Still IAS good. Lots of things. In IFRS they say that follow this IAS 31, 36. That's what they say. So IAS still is important. And coming to next, the United States doesn't follow IFRS. However, US Securities Exchange Commission requires public companies in US to follow generally accepted accounting principles. Remember, as I have cautioned you in the beginning, as I discussed you in the beginning about GAAP, in lots of financial accounting subject, this GAAP has been taken out. These accounting concepts and principles have been taken out. But remember, even countries like USA, they say strongly to follow GAAP. They have given lots of accounting principles. If you follow those principles, your company will be good. If you are a good man, what will happen? Remember, you'll have all good practices. You will report everything and everything will be good. That is all. And I will highlight you again. China, Japan have also declined to adopt IFRS. Although adaptation has slowly gained momentum in Japan over years. But still certain companies are following. As I said to you, these are not bad things. IAS and IFRS are not bad things. Even though they have studied whatever they have secured in Harvard or universities in UK, USA, or Singapore, or Malaysia, or Russia, or India, whether you are wise enough to know these are useful or these can be changed to suit your companies, you have done nothing to your company. So, a person who doesn't know lots of things, who are not wise enough to know or change certain things, can at least follow things in IAS or IFRS. Right? So, these things are not at all bad, but a wise man does more than IAS and IFRS is a fact. The bottom line, we will move to the bottom line. Academic research reports from adapting jurisdiction from European Commission and Korean Accounting Standards Board indicate that IFRS adaptation has positively impacted on capital markets by reducing investment risk. See, they say that by following IFRS, as said by me, there are more reports in IFRS. You'll have to report to the capital markets. You'll have to give more reports to SEBI in India, for an example. So, the capital market is more efficient. I would say in simple terms that a wise man or a good man, become a good man. You don't need this IAS or IFRS. Be a good man. I think instead of inventing a robot or artificial intelligence, instead of bringing a AI or a robot, you make a better man. You build a better man. That is what education is. Build a better man. So if you are able to do that, everyone will be benefited. The standards is for that. Right? This is the bottom line of it. We'll move to the next slide. As I said you, I'll show you about IFRS standards and the numbers and the purpose is given. I'll just show you. You can go through it by passing the video, right? I'll just go in fastly just to make you aware about what are the standards and name of the standard in which year it was issued, right? You can see IFRS S1, S2 and here they are highlighted the purpose of the standards, under what head the standards is. It is for disclosure standards. Next is IFRS standards. International finance reporting. Remember, these standards are for reporting. So more focus is given on reporting. IAS is also given for reporting, but still more focus is on reporting. So you can see lot of things are there for reporting. right? You can pause my video and look in the purpose for which it is for reporting. Remember, business combinations, share based payments, consolidated financial statements, right? These are things which will be useful for international mergers. International merger. So, in certain case, there are lots of advantages in financial reporting, these reports, right? We'll move to the slide. You can pause and see the video to know what each IFRS is. And here comes IAS standards 2, which I still follow, which have been updated as said by me. IAS 1 is updated in 2020 and so forth. Lots of IASs are here. I have given you a list of IAS. For example, borrowing cost disclosure, right? So there are lots of things that has to be disclosed. Interim financial reporting, disclosure on it. Accounting and reporting by retirement benefit plans. So they have created lots of disclosure requirement because of this capital markets. If we remove the derivative segment which doesn't serve a big purpose, which has been exploited by lots of trader, you will not need more of this IAS or IFRS standards. Just remove derivative markets or change your derivative mark such that those who hold stock of shares can do derivatives. Those who hold stock of commodity can only do derivatives in that particular stock in which he has stock of it. Do that as a procedure. Let government do that. Only if government do that, the government is genuine. Else, whatever standard comes, it will not serve a big purpose in long term. Yes, my honest opinion. We'll move to the next. Advantages of IFRS, pros and cons. We'll just go through quickly. Advantages. Global, you are creating a consistency in implementing certain things. Improved decision making in mergers or acquisitions, whatever it is, your decision making becomes a better decision. Then access to international market. Because of various reports, you have access to different companies in international market. Of course, you don't go in for search of travel to another country to know the facts. You save cost. Enhance credibility. When you follow, you say that I follow IAS standards 1, an unknown person of your company will find your company's credit. But a person who knows your company without any IAS or IFRS standard will create you better, right? Mergers and acquisitions. When you go in for international mergers and acquisitions, this IFRS will be a boom. But a wise person will just visit your company and he doesn't need IAS and IFRS. Just visiting your company for a week or a day or two will know they can go in for a merger or not, right? And investor confidence will grow. Then comes your disadvantages. There are some complexity in following the standards. Lack of regional specificity, as said by me. You need to customize it. A wise man customizes well. An accounts manager customizes it well. If you go and look into lots of standard, into a form you read, you'll just laugh. A wise man will laugh. Because it has been created and it has not been made really. Then comes your cost of transition. When you are moving from one to another, the cost of transition is large, right? Then your judgment based reporting. There are certain reports based on certain judgments. Case of intangible assets, it's based on judgments. Then comes your limited industry specific guidance. When you go and look into the forms, as I said to you, a wise man can change lots of things in that IAS and IFRS. In the reporting standard, you can even add on certain facts to it. No one is going to object, right? If you add more details to it and mention that you have included these details in this IFRS form, no one is going to accept. But it is good if you mention that in addition to that IFRS form, you have quoted this. That is one of the best. A wise man can do that. And last disadvantage is volatility impact. That is how they are updating. Right? We have discussed a lot. Thank you for your patience. Hope I have taken sincere attempt to enlighten various things that is associated with international accounting standards, IAS and IFRS. And thank you for your patience and your attention for this long time. Have a good day. Valga Valamudan.